All right. Awesome. Well, we're already a couple minutes past 7 p.m. Eastern here. Looking forward to getting the webinar started here. Thank you everyone for joining us. I'm Joe. I'm one of the co-founders here at Cycle CPA. I got Carla, the other co-founder. So throughout the webinar, you can enter your questions in the side chat box, the same place where you guys were all mentioned where you're from. We'll try our best to get to as many questions towards the end of the webinar. And yeah, just a little background on Cycle CPA. So we're a remote accounting firm offering anything from bookkeeping to CFO services for landscape businesses. So looking forward to getting into very exciting stuff of overhead expenses, right, and using it to your advantage competitively. So Carl, if you want to kick us off here.
Yeah, no, thank you for that intro. And again, feel free to ask any questions we will be answering at the end of the webinar, and you will be receiving a recording of this to your email afterwards as well. So, no, that's great. So, we get into this question of, have you ever been astonished when you don't get a potential job or a contract and wonder how the winning contractor could make a profit from their bid that they put in, and kind of leaves you thinking there of how could they offer this service at this price? And so that may be due to an overhead advantage that they have in their business.
Yeah, and that's one of the reasons, right? There are multiple reasons. They may not be doing things the right way, which I know that's a reality in this industry.
Right.
But we're gonna highlight tonight some, one of the aspects that could definitely be a factor. Maybe that other company, maybe they have a leaner overhead and they're operating with lower administrative expenses.
Yeah, and so to start off with a quick definition of what is overhead, it's all the expenses that are not associated directly to the job. So expenses that are directly associated to the job is labor costs, materials, dump fees, subcontractors expense, equipment rentals. All of these expenses are directly related, but overhead is not directly related to the job. So something like advertising costs, administrative costs, office rent, things of that nature.
Utilities.
Yeah, utilities. So really, it's the costs below the gross profit line. And a lot of these costs, here are some examples of a lot of these costs. So like I mentioned, insurance, recruitment, merchant fees, workers' comp for your administrative staff, taxes and licenses. And so all of these line items in a typical landscape company, I'm going to give you a range, make up around 20 to 30% of your revenue. So it's a big chunk of what makes up your revenue in these overhead. So it's important to keep track of every single one of these line items because they do add up, like I said. So within the overhead expenses, there are more fixed overhead expenses, and there are variable overhead expenses. So starting with the fixed, that means that these expenses don't really change. They usually stay the same or about the same amount year over year. So for example, rent expense, that usually stays the same year over year. Not accounting for some little price increases, but that's around the same amount each year. Depreciation expense, administrative salaries, these are more fixed. So because they're fixed and you really can't do anything about them, like it's really harder to cut costs on rent expense, because you're kind of committed to a lease, a contract, you're comfortable where you are. Think of it that way. It's really important to think strategically before you make that commitment in when you're going into a fixed cost. So when you're looking to rent a shop, when you're looking to hire an administrative person, it's really important to make an informed decision based on your numbers, because this is going to be a fixed cost, whether, you know, in each month, whether you have a revenue or you don't. So because this is a seasonal industry, so during the winter months, you're not making as much revenue, but guess what? You're still going to have to pay your rent. You're still going to have to pay your administrative staff. That's why it's important to really take precaution when looking at your fixed overhead, because again, there's not much you can do about those costs, or there's less wiggle room, right?
Yeah, and a good way to think about the fixed overhead expenses. Imagine if, or I mean, I guess we don't have to imagine. You know, there was a pandemic, and there was, you know, a couple month period where there really wasn't much business activity. So think about those expenses that you were still having to pay. Think about some of the administrative salaries, rent, as Carla mentioned. So that's what is considered fixed overhead expenses, and always to kind of think twice before you make a big move in that area, because it is less flexible when you look to make adjustments to that.
Okay. And then the variable costs are more, they're changing with revenue. So as your revenue increases, so do these variable costs. So examples are sales commissions, right? As your revenue increases, so does the sale commission. Advertising costs increases, decreases as that's being used. Another example is merchant fees. Merchant fees increase as you're making more sales, right? Office supplies, these items are more flexible and change with revenue. And so with these costs, you know, I did mention merchant fees, and we do see that this benchmark is high in the overhead section. So this could vary anywhere from 2 to 4% of revenue for landscaping companies. And this is high. So a way to cut costs on merchant fees are to either have the client pay for the credit card processing fee on their end, and being just transparent about it, that you do have that policy in your business, and having them having to charge them that merchant fee. If that kind of, you know, maybe you can't do it in your state, or you kind of don't want to run your business that way, you know, I know there's some negative connotations around on that, but if you don't want to do that, you can make it a policy where I know with one of our clients, we made it a policy that because they did have larger design build jobs, so anything over a certain amount, so let's say 10,000, we said that, okay, anything over $10,000, the client will have to pay through ACH or a check, no longer accepting credit cards, because the credit card fee on $10,000, $20,000, $30,000 jobs,
I think we lost Carla. Carla, does anyone hear Carla still, or is it just me? I think we lost Carla. Okay. All right, great. All right. All right, but everyone can hear me, right? All right, she's back.
Sorry, guys. Well, that makes it more entertaining.
Yeah.
All right. I'm not sure where I left off, but I said I was talking about either offering the merchant fee, having the client pay for the credit card processing fee, or having a policy where after $10,000, okay, I'm no longer accepting credit cards. I'm only accepting ACH and checks. So consider those two. Really, it has saved our client tens of thousands of dollars on just making that a policy. So that's definitely one way to cut down on overhead expenses.
Yeah, and you know, it becomes also something where you have to think of the time that it takes. Is it worth it for that $10,000 job or that large job for you to uh, potentially avoid some of those credit card processing fees? It might be worth that time, right? There are some times, especially when it's integrated within your landscape management software, where because of the convenience of it being built in and you not having to worry about some of the logistics of it, for each small payment, it might be worth to go in that direction. But with a large project, you might be able to avoid that, some of those fees. So as Carla went over in the beginning, it's something where you may try to get a contract, and you may wonder how come your competitor was able to bid at a lower price point, and a lot of people put emphasis on some of the direct expenses. Here I mentioned as cost of sales, really everything related to everything above the gross margin line. So materials, labor, right? So you have company B, company A, assuming that they both estimated the same amount of labor hours and the same cost of sales, right? So for every hour, they, in direct expenses, they understood that they would have to pay $80 per hour to break even for the direct expenses, right? So assuming that both of those are correct, company B, they are operating with an overhead per hour of $29, and company A, their overhead per hour is $24. They're both building in the same profit margin, and you can see company A is able to perform that job at $5 less per hour, which for a larger project like this, you can see it has a bit of a difference, and it could potentially be the reason why company A wins that contract. So, we just want to emphasize that focusing on your overhead could make a difference, when it comes to winning potential jobs. And this is kind of a simplified view at it. We're going to get more detailed into everything here, but it's a lot of it is like a mindset change, kind of thinking in terms of not just your gross margin, but also taking into account your overhead and then ultimately your net profit, right? So and it's not only a competitive advantage, but it's also something that you want to always continually try to improve your business, try to become more efficient administratively, because you never know when something may happen, right? Or maybe cash flow might be low. You already want to be in a position where you're almost prepared for it. And I grew up, my father running a nonprofit organization, and he was always forced to be very lean administratively and operate in a way that allowed him to survive for over 30 years. Um, and I think taking some of that right? And applying it to this and applying some of that philosophy to your landscape business can not only be a competitive advantage, but can help you during the tough financial times as well. Carla brought up, watch out for the fixed expenses. Those are the expenses that, regardless of your work volume and the amount of business that is happening, you're still going to have to be paying those expenses. So remember, think twice when you do make some of those moves, right? So should you buy that piece of property or should you be renting that space? Do you need all of those office desks? Can some of your staff work remote? Right? I know some people just feel like it's something that's uh, they don't like the whole remote employee idea, but maybe some of your staff can, right? Because that it definitely adds up, and I had mentioned like the mindset before, but and even in one of our previous webinars that we did, I think it was 2 webinars ago, talking about some of the equipment and even the labor and thinking about the return on investment, right? The ROI on some of those decisions. And we see that a lot, right? You go and you make these large purchases, or you strategically think about what moves I'm going to make in the early part of 2022. But don't let that stop at the gross margin line, right? Keep all of your overhead involved in those discussions, and we're going to go deeper into that as well. When it comes to some of the technology that you can utilize. And this is another thing that we see a lot of businesses and a lot of landscape. A lot of landscaping businesses, have the landscaping management softwares, which are fantastic, but they're not the whole picture, right? They don't give the whole scope of the projects, even the job costs, and you are still required to not only have an accounting software but track everything correctly, which really comes down to the overhead expenses. There are some landscape management softwares that even have a budgeting feature built in. You don't want to take industry average overhead numbers. You don't want to see what your friends are putting in for their overhead for their budget. And you want to use your actual overhead. So what was your overhead in 2022? That's what you input into your budget for,
Right.
or what was your overhead for 2021? I'm sorry, and then implement that into your 2022 budget.
Yeah, and you
And
can.
yeah,
Sorry, but you can find this information in your accounting software. So whether you use QuickBooks or Xero or Sage, that's where you're going to find your overhead expense numbers. And again, like Joe said, this does not replace your landscape management software, because a lot of those softwares track above the gross profit line, your labor, your materials, all of that is great, but then it's not tracking your overhead. So you need the accounting software to track your overhead, also for compliance purposes too. But yeah, we do run into some landscapers. They're using their landscape management software instead of or in replacement of an accounting software, which should never be done. You should have both.
yeah, and at the end of the day, you're not in business to make a great gross margin, right? You're in business to make a great net profit.
Yes.
That's the bottom line. So that's what your job costing should reflect. That's what you should ultimately have a smile on your face at the end of the month when you're looking at your financials. So, and having month-to-month financials makes it even accurate. makes it even more accurate, right? So not only having this data maybe at the end of the year, it is helpful for sure, right? But I would say it's exponentially even more helpful if we're able to have that accurate overhead figure, things like your actual labor burden. These are things that are not in your landscape management software. So this is why it's so important, whether you outsource your accounting, whether you do it in-house, to make sure that you're doing it on a frequent basis so that you can use that information. And where do you use that information for? You track that overhead so that you can use it for your future estimates. You estimate the project, you know how much overhead, right? Even depending on how you do your estimates, if you do it, overhead per hour, you know how much you need, right, to recoup it in your estimates, and that really makes for a very accurate estimate. And so, as I mentioned before, everyone uses a different method for estimating. I think it's nice to take a look at the overhead per hour, since your business is really driven by hours, direct labor hours. I think it's good to take a look at this here. So let's say your company has multiple divisions. Total overhead for the company is 27% of revenue. There are a couple of things that right, or you should know based on your financials, that your overhead for the year was $230,000 for your landscape install. For your maintenance division, it was $100,000, right? So you have the two overhead, the amount that you had to spend on your overhead expenses. You also have the total hours that you had for each division. So 10,000 hours for landscape install, 9,000 hours for maintenance. And then really it's pretty simple. You just divide. So for the landscape install, you do 230,000 divided by the 10,000 hours, and you get the $23 of overhead per hour. And then for maintenance, you do the same type of calculation. You do the $100,000 for overhead in your maintenance division, divided by the 9,000 hours. And you can see, so these are accurate numbers, right? So that you can use to ensure that you're recouping these overhead expenses in your estimates. And this is another point here. I would say even very large companies, they don't do this, and in our opinion, they really should be doing this. So this is knowing that one of the biggest expenses within your overhead is your administrative salaries, right? Your operations manager, maybe your office manager, administrative staff in the office, owner salary. So this usually, it takes up around 10% of revenue, actually. So it's a big chunk of expenses. And in this example, you see that your operations manager spends 20% of his time in the field actually performing the work. He's actually gets his hands dirty, and he's there doing the projects with everyone. And the remaining 80% of his time is working on administrative tasks. Maybe he's selling, maybe he's leading the crew. So that 80% has to be allocated to overhead expenses, not direct expenses, right? So that 20%, that is being allocated to direct expenses above the gross margin line. And the rest of the 80%, that's below the gross margin line in a profit and loss. And that's being allocated totally to overhead expense under your administrative salaries. Now, one may think, why are you getting so detailed, Joe? That's kind of ridiculous. But it does make a difference. And the reason that it makes a difference is let's say if you didn't do this, right, and you were and you were allocating the all 100% of his salary to admin or overhead salaries, then you would then look at the crew, right? You would look at the direct labor, the guys working in the field, and you would think, wow, they're doing a great job. They're doing really well. In reality, it's actually because you're not counting some of the work that your operations manager is doing, right? So it's important to make sure that you're allocating that correctly.
Yeah. And
Whether you're,
sometimes,
yeah, I'm sorry, Carl.
yeah. And sometimes, so when you start, and maybe you don't have a manager yet, where this could, apply too, is if you're just starting your business or you've been in business for a couple of years and you're still wearing multiple hats, and you're doing a lot of the administrative work, and you're also helping out in the field. Owners' salaries too should be split between, um, direct labor and overhead salaries as well.
Yeah, and another reason why that's important too is because it gives you a clear understanding of direct labor versus overhead labor or admin labor, right? And let's say if it's the owner, right? You understand that you're still spending 50% of your time in the field, right? So having that awareness, right? And we're going to go over more into that, later on. We're going to take a deeper dive. So, um, and this is a philosophy that applies to a company just starting off, or maybe a company that's starting a new division or a new location, right? So we'll start with a circumstance over on the left side of the screen, business A, right? So they're in the beginning stages of their business, and it's important that, especially when you're pricing out work, and if you're looking to grow, right? You're looking to grow in size. That if you're pricing any recurring or contract work, that you're building in um, room for future overhead expenses, right? It's okay if you're on here, you're self-employed, running a highly profitable business. You may not have to prepare for things like that. But if you are looking to grow, right, you have to make sure that, if you do want to, ultimately step a little away from the field, that you have to, um, you know, make sure that you're building in maybe a future person that's going to help you with HR or accounting or, um, invoicing
Manager,
or different
yeah.
things within the office. So account for it now, right? And this same philosophy, as I mentioned over on the right side of the screen with business B, it goes along the same lines, right? If you're opening a new location, or a new service line, and I'll start with, maybe a new physical location, right? This is something that we see. Maybe there is some overhead, right? Some admin staff or some admin work that's being done at that local new office, right? Um, and you're looking at the profit and loss for that new office, and it looks fantastic, right? However, something that you may not be accounting for is some of your, and we call it corporate expenses, right? So maybe the company has a COO or a vice president or some sort of manager that works between the different uh, offices, right? You have to make sure that all of those expenses are being shared, but ultimately also being allocated to this new location. Um, I know sometimes it gets exciting to be expanding and doing different things, but really what it becomes, it's almost like you're starting another smaller business within the same business. You have to make sure that you're putting the same attention that you put towards it, as if you were starting a new business, right? So make sure that you're building in the overhead, and that you're taking into account all of the overhead expenses, not just the people in that one location, but everything that it takes to actually run that separate office. And so, as I mentioned before, administrative salaries takes up a good amount of your overhead. So I want to focus on it even more here. And I think this goes along with reducing overhead, but one thing to keep in mind is that the driver for overhead expenses and how much you should be spending on administrative salaries is not the workload. And what do I mean by that, right? So you may be in a position where your location or your business, you're just starting out at $300,000 in revenue, right? And you have someone working part-time and they're completely swamped with work, and it may seem like the right time to bring on additional help in the office administratively. However, you want to make sure that for overhead salaries, that you're not exceeding 10%, right? You're not, and it does vary from business to business, and each business is different. But using it as a ballpark figure, right? Or just to give you an idea that it's not as much the workload that guides how much you should be spending on your administrative salaries. It's what revenue size you're at, right?
Yeah.
Because company A could have zero softwares, could have no CRM, could have no processes, no checklists, no systems, no streamlined administrative setup, right? That doesn't mean that they should be going and hiring more people. It means that they should find a way to do what they have to do to set up their systems in a way that they can expand, and they don't have to hire additional staff to exceed the 10% and go to 15, 20%. Because then you're defeating the purpose of growing, right? Because ultimately you want to make a net profit, more net profit if you're growing. You don't want to make the same net profit if you're increasing revenue. So that's something to really think about, right? So think about, how, what influences, your decision when it comes to, adding on your administrative, people. It's the revenue, right? And, looking at this, even looking at some of the exact numbers here, looking at a $1.2 million company, or let's say it's one of your divisions, seeing that, you can comfortably have around 120,000, allocated to that admin, so whether that's a couple staff in there, whether you're outsourcing things like accounting and HR, and whatever you can do, because even if it's something that it seems like it's kind of working out now, it may not be the same process and the same systems that will take you from 1.2 to 2 million, so you should always be proactive in understanding that.
Yeah, no, that's a great point. And something that I want to point out. So what we see with working with many landscape businesses, some businesses just starting out all the way to more established business, is that this is the major problem. It's the overhead salaries. So if you can take anything away from this webinar, is this. We've seen larger, smaller companies doing great above gross profit line. Gross margin looks good, gross profit, and then we look at net income and they're drowning. And it's more times out of not, it's because of the overhead salaries. It's very high. It's above 10%. So this is what really kills them, because their overhead salaries is above 10%. And if they start building in the 20% actually overhead salaries that they have, and they start pricing their jobs that way, they're just going to lose their competitive advantage or be above market price. So they're relying on bigger jobs to kind of pull them through. Maybe some jobs are not even profitable, and it really hurts the business when you're scaling. So if there's one thing, again, a key takeaway is this, and I just want to clarify. So again, overhead salaries make up 10% of revenue. In overhead. Overhead is 20 to 30% of revenue. So this could make up half of your overhead expenses, or a third, right? So this is a huge chunk of overhead expenses. And this is where the problem lies. So, and I want to further clarify on what isn't included in overhead expenses, overhead salaries that we're talking about right now. So as you can see, it's accounting, human resources, office administrators. So that's, office staff, maybe they're doing some accounts receivable, payable, receptionists, and ops overhead salaries are managers and sales people. They're all of those titles that I just said, those are all overhead. They're not directly in the field providing field labor work, right? Or a portion, maybe, like Joe had mentioned, splitting the cost. And so this is really where companies start going downhill. So if we're looking at company A, when you're a $300,000 company, within your business, you may be doing a lot of the sales. Maybe at this point, you already outsourced your accounting, your payroll function to a payroll provider. And maybe you even, started outsourcing to a call center or something like this. So you're still wearing a lot of those hats that make up that 10%. And you want to cut costs, and you want to implement streamlined processes during this phase of your business. So because you are, for example, the HR function, the payroll, if you have a payroll provider, we partner with Gusto. They provide, the reason why we partner with them is because they provide great payroll services, and they have great customer service, and they're the most cost-effective option out there. QuickBooks Online Payroll, or QuickBooks Payroll is at a higher cost than Gusto. And within Gusto, there are so many there's so many options in there to streamline your HR function. It tells your employees, okay, this is the time to enroll in benefits. You can pull your pay stubs, your W-2s from here. You file your payroll taxes. Your employee has their own login to pull all those reports. So they're not asking you for those reports anymore. It takes you 10 minutes to run payroll. Again, it's really cost effective. So these are the things that you need to start looking into. So that way, when you grow and scale your company, it's not this function here is not growing, at a more rapid pace where you need to hire an HR person or something like that. And so, for example, if you're doing a lot of the sales and the estimating and sending out estimates and a lot of those items, looking into a landscape management software that can help you with organization of those items. Maybe looking at a software that helps you with your sales, your leads, tracking them, reminding you to follow up with them. A software that keeps your schedule. So these are the days that I'm going to stop at a lot of my places where I need to do estimates and not kind of mismatching and kind of being in the same neighborhood at the same time. like, so all of these different softwares and the policies and procedures that you come up with for these um, overhead activities that make up your overhead salaries, the better that you can get at those, the more that you're going to cut costs as you grow, right? Because you don't want to just let all of these functions go and then, like Joe said, kind of offload it into a full salaried person and kind of unload the work like that, which we want to do that, right? Because we're very tired at the end of the day. We don't want to think about administrative tasks or anything like that. But that's when you get into this sort of pickle here where your overhead expenses are very high. And so that's a key takeaway there on this end. So again, it's really about building the pillars now, or if you already have the so for example, we have one client of ours was either looking to outsource their HR or bring it in-house. And we did a little cost analysis, and we found that outsourcing their HR, because this consultant knows a lot of the handbooks and the items that need to be filled out when it comes to HR, was a better option than bringing someone in-house, because now we were going to have to pay them a salary, vacation, benefits, health, all of these items that added out to way more than rather than outsourcing it to an outsource HR consultant. So thinking about these things as you grow or as you're growing, and so on.
Definitely. Absolutely. Yeah. Each line item makes a big difference. And it's important to understand that the best course of action may not always be to cut or reduce overhead. Sometimes the approach of making improvements while growing in revenue could help to decrease your overhead percentage.
Right.
And some things to kind of keep in mind, and this could be something where it's kind of like a never-ending effort, where you think that you're growing in revenue and that'll fix the problem, but it really becomes something where you do have to put energy and thought into. All right, so
yeah,
like in this example, if you're $800,000 company, and if I'm looking to increase revenue, how do I make sure that my overhead is not growing at the same rate, right? So we want it decreasing at a slower rate. So this is definitely an approach you can take, and you want to think about when you are in that position to start, where that you have to make an improvement. What is the capacity, right? What is the capacity of your administrative staff? What is your capacity of the person doing invoicing or doing some of these tasks in the office? And can they handle another 100 customers, another 50 customers, 200 customers, whatever you're forecasting in order to hit that revenue goal, because that's really important, and it's important to be realistic about that. And maybe it doesn't necessarily mean you're going in the same systems and the same processes that you have laid out. Maybe it means you start to you start to look more towards other options, that are cheaper alternatives. And so one of the approaches here, so if you can imagine when you started your business, each expense, especially overhead expense, when you first started, was added on relatively slowly over time. And it may take that same approach when it comes to reducing and even making some of these line items more efficient for you. So be patient, right? Don't get overwhelmed. but I put this here, just to kind of almost as a reminder for you, right? It can get really busy, so really this being a reminder for you guys to look at your profit and loss, right?
So in each line item here, Joe, there's 5 ways to cut costs for each line item. And so that equals to 155 ways to cut costs.
Yeah. So let's say in this example, you say on average, there's 5 ways, right? So it just gives you the idea
Wow.
of taking that approach.
That's awesome.
You
No, I
know,
like
and
that.
yeah,
And just off of the top of my head, insurance. Like if we're looking at insurance costs, some things that you may want to look at is, are you bundling health, auto, general liability, or are you using different carriers for that? Because if you bundle, you'll save on insurance costs. Are you renegotiating each year or shopping around each year once that renewal hits? Or are you just hitting the renewal option because that's the easy way to go? I encourage to shop around each year once your renewal hits. You're bound to have a better option, a cheaper option. Interest paid. Do you have a bunch of outstanding loans that you're paying interest on? And can you possibly consolidate that into one loan that has lower interest so that way you can pay less interest expense on it? Can you renegotiate with those creditors for a lower interest rate since you've been a client of theirs for a couple of years? You can do that. Those are 2 ways right there. Internet utilities, bundling. Again, are you bundling those services? Are you shopping around? Legal and professional fees, outsourcing things like legal and accounting fees rather than hiring in-house. Recruitment, HR, shopping around for different payroll providers, like I said, looking into Gusto, really cost effective, or any other options. We also work with an HR consultant. That's outsourced option too, if anybody needs a good referral source for that. Merchant fees, I already went over. Meals and entertainment, keeping our employees and staff accountable for their spending on that end. Same thing with office supplies. Can you buy in bulk whatever office supplies you're needing in order to save money on that?
Or even thinking about, trying to go paperless in as many things possible.
That's true.
That'll decrease some of the office expenses.
And dues and subscriptions. This is a very funny line item where we dive into all these line items with our clients, and it's all like, oh yeah, I forgot I was paying for that subscription. I don't even use it anymore. And it's like, okay, please cancel it today. We don't need it on the books. So looking over things like that is just so easy. And what we do is we benchmark all of these line items for our clients, and we're able to let them know, hey, it looks like you're overspending on meals and entertainment. That looks pretty high. Who are making those purchases, and so on? Or it looks like travel's very high, or insurance. Maybe it's time to shop around. And we also had a webinar on ways to cut costs and overhead. It's in our YouTube channel under Cycle CPA, and you can get some ideas on there too.
Yeah, and so if you think that we're, that five ways to reduce for each of the 31 line items was too much, here's just one example. And some of these were even from the Facebook group, Landscaping Accountant. If any of you are not in there, I definitely recommend hopping in there. But we got a lot of people to answer back, and even just based off of what some of our clients say.
Wow.
And we know that some of these may be more based towards like direct expenses, but a lot of these really have to do with some of the overhead, whether it's 4 day work week, if that works for your business. um, Finding a way to uh, you know allocate an entire day to your estimates and getting more efficient with that. So
Yeah.
there's a whole bunch of ways, and it really just comes down to you sitting down and um, making sure that you put attention toward this.
Yeah, and you may think to yourself, oh, Carla, like, I'm not going to save a bunch of money by just unsubscribing to one subscription, right? And yeah, sometimes it's unsubscribing from one subscription and saving a couple $100s. But our approach, what we're really looking at here, is to go to every single line item and start cutting little by little on every single line item. And so those little percentages now turn into a big percentage overall over your whole overhead expense. So that's really the approach we're really shooting for here.
Absolutely. And I think that we're in a real interesting time, and something that when it comes to overhead expenses, you can only use technology so much. And I understand that there's new equipment coming out and different things like that, for in the field. But there's some really some really amazing softwares and technology coming out that can help you on the administrative side as well. I know we touched a lot on some of the landscape management softwares and CRMs, but then also thinking about there's apps and softwares. I know we were talking with the app called Team Engine. They help with automating recruiting, HR. Whether it's going with like Carl was mentioning, Gusto. They have offered payroll for a while, but they've been working the HR aspect more and more into it. So building in processes, like an onboarding checklist for people, pretty much. So
Yeah.
now all of a sudden you don't have to focus as much in the office or have people, send someone out the direct deposit form to fill out. It's automatically done.
It's automated.
Thinking about the other automations, we, I know some of you have probably used Simple Growth with Mike Callahan. They do a lot of this stuff, a lot of the automations. But and if you're not familiar with automations and how that can help your business, definitely look into it. Whether it's on the marketing and the sales side, right? Maybe putting a chat tool in your website, or something that makes your estimates more efficient, or just there's so many different ways within your sales, and making sure that you're tracking your leads correctly. So that's one thing. Also, just the old-fashioned checklists, processes, and really trying to systemize as many things as you can. That's really that's always going to be beneficial for you. So, and that'll be it for tonight. But
yeah, I'll go through some of the questions here. Yeah, if anybody has any last minute questions, feel free to drop it in. We have a couple minutes here. So someone said, do overhead salaries include owner's salary? So it does, because the owner, in the beginning stages, or in the first few years, they're wearing a lot of hats, as you all know. You have your sales marketing hat, you have your administrative hat, your field labor hat, and your HR hat sometimes, right? And so those times where you're performing overhead work, sales, HR, admin, that time is all allocated to overhead. So if you say, I spend 80% of my time doing overhead work and 20% of my time is in the field, that's how you would split your salary between overhead and direct costs and so on.
Yeah.
So, and that's a rough, it doesn't have to be a to the T and you're clocking in and out of things because, you're an owner and you have things to do, but it's really a rough estimate of how you feel like you should split your time. And then someone said here, let's see, can you please explain what depreciation expense is? Yeah, so depreciation expense is an overhead cost, and depreciation expense is the amount that you're deducting for deterioration or depreciation of your assets. So your assets are things that you buy that is over $1,000 that benefit your business for more than 1 year. So an example that I like to use is a mower. If you purchase a mower for $5,000 this year, right? You're not going to expense the whole $5,000 on your profit and loss all in 1 year because you're not using that mower just in this year. You're going to use it for the next few years, at least, I hope. So let's just say that for your business, you're going to use that mower. You think that you'll hold on to a mower for 5 years. So the depreciation expense will be $1,000 each year because you have to incur the cost as you use that asset up. You're not going to fully depreciate it in 1 year for book depreciation purposes. Tax is a whole other thing. Tax depreciation is different. That's just for compliance reasons. I hope that answered your question. Let's see what other questions do we have here.
So Nick had mentioned, what's our experience, when it comes to overtime. So so putting in the cost for the job. So, when it comes to overtime, really, I would say start with your past financial data. So for instance, like looking back in the past 12 months, how much did you pay your employees, including overtime, within that amount. So you're automatically in the future using that info, using that total with overtime plus regular hours together in your future estimates. So you're already going to be incorporating it. There's no reason to get specific from job to job and trying to figure out. It's better to just include it as if it's almost regular hours, because that's going to you're going to end up accounting for it, right? If you include it within your calculation. I hope that I'm making sense there.
Yeah, it's
Carla, could you explain that better?
I'll try. So what you're wanting to do is if you have a lot of overtime, if you have a lot of overtime within your business, then it's the time that it's taking to get your jobs done, right? You're not looking to incur overtime on purpose. It's just what it's taking and to complete your job. Assuming that all your staff is working efficiently and they're not just hanging out, right? So, if it's not an efficiency problem and it is the amount of time and you think that, yes, that's the amount of time I'm just incurring overtime, then what I encourage you to do is go back to your payroll reports and pull. There's a way to pull your overtime hours and your regular hours, and I would analyze that, your overtime hours and your regular hours, and turn them into full-time equivalent hours to see, okay, is it something where maybe I need to hire someone else at this point because it's equaling a whole other full-time salary, the overtime hours? Or is it something where maybe my staff is being inefficient at? So, tracking their budgeted direct labor hours versus their actual hours and keeping them accountable on some type of scoreboard or a weekly monitor is a great way to stay on top of, is it truly because the job is taking that long and maybe you need to add on another employee, or is it because inefficiency purposes? And you're only going to be able to find that out again if you track what you budgeted for versus actual, at least on a weekly basis, and keeping that scoreboard somewhere where you can go over that with your staff on a weekly basis.
Yeah, and Nick, that's a great point that you brought up, because ultimately, being the business owner, you have to make that decision. Maybe financially, without looking at any other factors, it doesn't make sense to have them work overtime. But is it worth paying them a little bit extra and having them be happy and working that overtime, rather than leaving the business? What will that cost? What will it cost for you to have to find someone else, train them, get them up to speed? So, it's something to think about, but I think the bottom line with the overtime is build in overtime and regular hours, right? So
yeah,
and if those combined is, let's say, $20 per hour that you're spending on labor, that you have to estimate your jobs with that rate, and I'm just talking about labor. I'm not talking about all the other expenses. So that's just something to keep in mind there. And James, I think so if you average like 15 direct hours,
that's fine. Yeah.
That's an interesting point, right? Because if you are working 40 hours a week and you're working the 15, I'm not sure what exact percentage that is, maybe 30% or 35% of your time, then definitely allocate that. So yeah, like allocate that to your direct expense.
Yeah. Awesome. Well, these are great questions, and I like the questions because you guys are on the right track here. If you have any other questions or would like to just hop on a phone call with me or Joe to discuss further about anything that we went over here, or if you're trying to get ready for tax time with your accounting and bookkeeping as well, because it is that time, feel free to reach out to us. Our emails are on the screen, or visit our website, cyclecpa.com, or join our Facebook group. It's called Landscaping Accountant. I also dropped the link in the chat for anyone who wants to join. It was nice having you on here, Joe, and thanks for joining me, everyone, and have a nice night.
Yeah. All right, guys.
Bye.
See you later.